Hello everybody and welcome to my monthly Vietnam update. November, definitely not a month for the faint-hearted. The VN index continued its correction and by mid-month was down minus 15%. This decline was mainly driven by forced sellers due to margin calls, but it looks like we have seen the worst of this washout and the market started to recover in the second half of the month and closed plus 2.1%. and the smaller mid-caps minus 4% to minus 5% still. Also, the AFC Vietnam Fund went through this roller coaster, but the NAV managed to close in positive territory at plus 1.5% according to internal estimates. Hi, my name is Andreas Vogelsanger. I'm the CEO of the AFC Vietnam Fund. Don't forget to subscribe to our YouTube channel and switch on the bell so you don't miss any uploads. The nerves of investors in the Vietnamese stock market were tested again in November with its continued decline in the first half of the month. On 16th of November, the VN index hit a yearly low of 873.67, losing a staggering 15.4% in US dollar terms since the beginning of the year. Despite healthy earnings growth of Vietnamese companies in 2022 of around 17% and a phenomenal GDP growth forecast for 2022 of around 8% and for 2023 of around 6%, and this despite the lingering recession fears in Europe and the US. This massive correction in the Vietnamese stock market was mainly due to disciplinary action of the Vietnamese government, arresting high-level stock and real estate manipulators and stopping real estate developers who were financing their business expansion by illegally issuing corporate bonds and selling them to local retail investors. This all happened at a time where geopolitical tensions were on the rise and hence ever-increasing global uncertainties of financial investors. These government actions have also created uncertainty followed by panic among local retail investors who typically are highly leveraged. The sharp correction in the Vietnamese stock market started to trigger more and more margin calls, with an ever-increasing number of Vietnamese retail investors turning into forced sellers. On top of that, with frozen corporate bond market, many real estate companies ran into liquidity issues. Many of the outstanding corporate bonds issued by real estate developers were collateralized with their own stocks, and with falling stock markets, this collateral also had to be sold, creating additional selling pressure. We believe that these government actions created a lot of pain in the short term, but are very important and beneficial for the long-term development of the Vietnamese stock market. The Vietnamese authorities has of course also realized the turmoil which followed by their disciplinary measures and have hence issued a list of actions to restore confidence in the financial markets. It very much looks like the forced selling is done and hence the VN index was able to recover in the second half of November, and if the Vietnamese stock market, as we expect, is now coming back to normality, there is a good chance that the current depressed valuation will finally catch up with regional peers, and hence we should see higher index levels soon. Also, when observing a longer dated chart, the VN index is now trading at its technical support levels. It's interesting to note that foreigners took advantage of the margin call-induced forced selling and bought Vietnamese shares aggressively for the first time this year. One of the larger real estate company which share price declined a lot over the past couple of months is Novoland. Its ticker is NVL. Many rumors circulated how severe NVL's liquidity issues were due to the frozen corporate bond market. This led local retail investors to dump their shares, which triggered a liquidation of NVL shares which were used as collateral for some of their outstanding corporate bonds. All this created enormous selling pressure on NVL stock price, and in November alone, more than 70% of its market cap was wiped out at the low from around $5.5 billion down to $1.7 billion. Only in the past couple of days, NVL stock price started to stabilize given the State Bank of Vietnam's effort to increase liquidity in the banking system in order to ease the liquidity crunch some of the real estate companies are currently facing. Examples like NVL were creating a lot of panic among retail investors, and the mood in the social media, local newspapers, and financial blogs quickly became overly pessimistic about the stock market and the economic outlook of Vietnam. We do understand that especially retail investors are incredibly scared in such an environment of falling stock prices. There are, of course, a few sectors, such as, for example, real estate, construction, and construction materials, which might face difficult times with increasing interest rates, but the reality is that the broad economy is on track and is firing on all cylinders. This becomes very visible when visiting commercial centers in Vietnam, with many shoppers or the busy restaurants, pubs, and crowded and vibrant streets in the various cities across the country with all its busy food stands. The Vietnamese government is very determined to keep its economic growth story on track, and hence the government is very keen to keep its government debt in relation to GDP at the very low level of around 40%. But it also tries to keep inflation under control, which currently stands at 3%, and it manages and monitors its currency and interest rates very carefully. The aim is to reach a GDP growth of around 5.5 to 6% in 2023, which is slightly below recent forecasts by Fitch Solutions with 6.5% and the World Bank with 6.7%. Let me talk about the current state of the Vietnamese economy and its future outlook. Vietnam is one of the fastest growing economies in the world, with an expected GDP growth of around 8% for 2022 and around 6% for next year in 2023. And this is despite fears of a recession in the US and Europe. But the recent fall in the stock market brought down valuations to incredibly attractive levels in Vietnam, with a forward 2022 PE of around 8.1 times, which compares to the Philippines with 11.5 times, Malaysia with 12.5 times, Thailand with 14.8 times, and Indonesia with 15.2 times. In our view, this creates a great buying opportunity for long-term value investors. It is also interesting to note that emerging markets, compared to the S&P 500, are now trading at the 34-year low. That makes you wonder if all bad news for emerging markets have already been priced in at this stage, and that the next 10 years to come might look brighter again. Exports from Vietnam to the EU and the US will most likely face some headwinds in 2023, given the risk that both EU and the US will probably enter into a recession next year. But at the same time, Vietnam will probably benefit from the current geopolitical tensions between the US, China, Taiwan, and the China's zero-COVID policy, with an accelerated manufacturing shift from China into Vietnam. But also the relatively new FTA, Free Trade Agreement, between European Union and Vietnam, which was signed on the 30th of June in 2019, is expected to have a positive and growing impact on trade between the two parties. If we look at exports in the first 10 months of 2022 from Vietnam to the EU, they showed an impressive growth of 14% year on year, regardless of record high inflation in Europe. Vietnam's export staples to the EU included machinery, equipment and spare parts, footwear, computers, electronic and apparel, toys, sports, equipment, seafood, coffee, among others. But also when you look at the first 10 months of 2022, export numbers from Vietnam to the from Vietnam to the US, they grew by 21.8% year on year and reached almost the same level as the full year export numbers of 2021. It is difficult to forecast how long a possible recession in the US and Europe will last before consumption will pick up again. But according to Fitch, they expect the US economy to enter into a recession, albeit relatively mild by historical standards. The tourism sector in Vietnam has gone through a very tough time in 2020 and 2021 with the absence of international tourists due to COVID lockdowns. Domestic tourism, however, picked up strongly in 2022, but the number of international tourists is still very low. Pre-COVID-19, China was the main contributor to Vietnam's tourist sector with an estimated revenue of $8 billion, 32% of total revenues, and 5.8 million tourists in 2019. As we have all seen the news recently, China is still holding on to its zero COVID policy, and hence it is difficult to forecast when Vietnam will again see rising tourist arrivals from China. But there was one piece of news which made us slightly optimistic that the situation might change soon, with the announcements of China Southern Airlines on the 14th of November 2022 that it will cancel pre-flight quarantine requirements for passengers on flights from Vietnam to China. Even though China has not yet removed all requirements, but it might be the first sign that the situation is slowly changing. The impact on a potential easing of China's zero COVID policy would of course have a massive positive impact on Vietnam's tourist sectors, and we therefore monitoring the situation carefully. We are very optimistic about Vietnam's economic outlook, but we also think there are a few sectors which will face a lot of difficulties in 2023, such as, for example, real estate and other related sectors, including construction and construction materials. A tightening monetary policy will lower property demand in the short term, regardless of a bright long-term economic outlook. We therefore have no exposure in the AFC Vietnam Fund in these sectors. We are still overweight the insurance sectors, given that insurance companies are cash rich and are a main beneficiary of rising interest rates. Besides the insurance sectors, we also have exposure in the tourism sector, given that we expect a strong recovery in 2022 and 2023. One of our holdings is in this sector is Dam Sen Water Park. The ticker symbol is DSN, which recently reported an impressive profit for the first 9 months of 2022 of 99.1 billion Vietnamese dong, which is an increase of 582% year on year, which even surpassed the pre-pandemic profit numbers. Well, this is all from me. Thank you very much for listening. You're gonna hear from me again early January 2023 with my December update. I would like to take this opportunity and thank you all for your support, and I wish you and your families a festive and wonderful holiday seasons. Thank you and goodbye.